Good afternoon, ladies and gentlemen. The time is 3:08 and we are already 8 minutes into averaging. Today is the 24th of March. It's the weekly expiry. And this position is more or less 100% going to end worthless at this point. I don't see how the 65 paisa or whatever retains value. So good expiry for me will be closing at 5.5 for the day. But it has been a very exhausting kind of expiry. Lately, expiries are one of two things. So it's like a double whammy. Either they are very tricky, exhausting. You have huge up moves, then huge down moves. 10 rupees call option will go to 50 rupees. And then the 10 rupees put option will go to 70 rupees. So it will literally move in every direction. It is very irritating to deal with. Finally, plus minus doesn't really go anywhere. But what's the point? Because you end up being forced to make changes to your position in order to deal with that random up down situation that's constantly happening. And even if it's a perfectly sideways expiry, as was the case some days back, the thing is from the beginning you're expecting that expiry is going to be tricky, so you don't take much risk, and on that day it'll be a smooth perfectly flat expiry kind of a thing. Anyway, all that apart, today my idea was that the range most likely will be so actually, I'm going to go over my entire thread because I think this is the best way to go over what was my trade and what was my thought process, what were the adjustment. So first thing that I did, morning, I punched the order for selling 17,300 call. Why 17,300? Because yesterday 17,300 was heavily shorted. And at the same time, 17,000 put being a psychological level, most likely to hold. But I had a little bit of a bias towards the downside given the global sentiment. And that's why I shorted 17,300 call and 16,950 put. Now, what time did I enter this position? Many adjustments today. So I entered this position exactly at the open. And I had more credit on my call side than on my put side. But this backfired very quickly because after the gap down, without looking back for a second, we shot straight up. Straight up. We made 160 points up move just like that. In the first 20-30 minutes, we were up 100 points plus. Now to deal with that, what I had to do is I was still quite confident about this 17,300, but the thing is, even if you're confident, there's a point at which you have to get out. So my stop loss was quite deep. What I did was move my put up to 17,000, moved my put up to 17,050, then moved up my calls. So I took a stop loss on the calls at 30, and that was a good point because that was the opening high also. Like that was the first stick. Let me show you. Yeah, so it was more or less exactly this candle. The idea was I want to get out. So at 30, 31, 32, I got out of this call option and moved it up because of the strength of the up move. There's nothing I could do. 13 rupees I've sold call option. My average is 13. You can see here the average I've sold it for is 13.5, shot up to 30. Have to get out. Finally, it actually went up all the way to 50. So you can't do any. It ended zero, but obviously, one second. This is moving up the puts. So it's squaring off this call option 17,300 at 30 and rolling up to 17,350. That was of no big deal because the 17,350 call option also went to 30 at one point. I'm just checking that no random move has happened. Yeah. There as well, what I had to do is I did not want to bring up my put. My idea was I will take a stop loss on the call option. So I took a stop loss on the call option, moved it up to 17,400, sat in it for as long as I could. I was in a negative market. I think highest I was negative 8 points. And then after a little bit of cooling off of IV, the position came back into positive because whatever that call side spike had happened, it cooled off. Also moved up my puts to 17,100. So you have to see my entry is 16,900 put, then 16,950 put, then 17,000, then 1750, 17,100. It's not even the first hour and I've already made that many changes and got stopped out of the call option and moved up. So I started with a bearish bias, got pushed out of it obviously very quickly, and then this was my position. From here, the idea was, you can see whichever goes to 21, I will square off. Why 21? Because that was a swing on both the options. And also it's about 1.5 times the price that it's currently trading at. Call option went to 21, got stopped out on that, moved to 17,400. And after that, the idea was the call option once again was expanding. But until this particular swing, which was at 19, gets taken. I've already moved up my put so much, I don't want to move my put up further. In case it takes out the swing, then I'll take a stop and move the call up further. And my position was still in the green, so I didn't have to worry about that. After that, we started making a down move. This 17,100 put option, which had gone as low as, I think at one point it was at 5 rupees. It then started shooting up. I had to move down my call. This started going to 15. I got stopped out on it at 15. So once again, the puts which went down to 5 rupees went up to 15, went up to 30 also eventually, but I had to take a stop at 15. Moved it down to 1750. Market dilly-dallied in this range the entire time. I didn't get stopped out here. I was very close to getting stopped out, but not really. This was about 17. And also I took on additional risk. Now just imagine the 17,300 call, which in the morning I had shorted at 13 rupees, got stopped out at 50 rupees, made a high as I got stopped out at 30 rupees, made a high of 50 rupees. And then again, I'm shorting it for 10 rupees because that's the kind of market we are in. Like, you can't do anything. Market is going up, you're getting stopped out on your calls, you're moving them away, you're bringing your puts up, then the market decides, okay, now I'm going to fall from here another 100 plus points, and then you get stopped out on your puts. You bring your calls down. So it's just back and forth, and it's very exhausting. I tweeted today saying that expiry trading is very similar to people who smoke cigarettes. They say cigarettes reduce your lifespan. Expiry trading also, I'm sure, reduces your lifespan by some amount. Okay, so after all this up down nonsense, my idea was I'm just going to have a stop loss of 13 on this 17,300 call. I do not want to move up my puts further because, boss, I've seen this before. We go up, puts lose all their value. We come down a little bit, puts blow up, right? So anyway, didn't do that. My stop loss didn't hit, which 13 was at the swing and it didn't hit. So just basically trailed the position for the rest of the day. Moved up my put basically with 10 minutes to go for averaging, moved up for 2 rupees extra because this call was at 4. The stop loss was, I'm sitting on 8 points. If the position goes to 10, take risk off in the direction of risk. And then more or less trailed that till now. And now this position is ending worthless. And overall, I'm quite happy with how I managed the expiry, where I placed my stop losses. It was just one of those very painful kind of expiries, and it would have been very easy to get caught in a gamma expansion because the rate at which these options are blowing up, it's like they're doubling in like a couple of seconds, right? So in 5 to 10 seconds, 10 rupee option is trading at 20. So it's very difficult to manage that stuff. The only thing that works is trading a little wider, keeping higher probability, keeping appropriate stop losses so you don't just randomly get stopped out of a position. And yeah. All that said, towards the end, surprisingly, IT and Reliance ending at the day's high. Bank Nifty not so good today, ending at the day's low. And we'll see what kind of... And overall, I mean, despite this, India VIX has come down quite a bit. So we'll have to see if there's a huge crush tomorrow morning in India VIX. I might choose not to trade, or I might trade something like a double diagonal. And yeah, that is about it. That is the summary of the day. Thank you so much for watching. I hope also, like, some people ask me, what is this ITC call is losing money and Reliance is losing money? This is because I have almost 5,000 shares of ITC. I have 1,600 shares of Reliance. I've sold call option as an earning trade against that because they've run up a little bit. And in fact, I will be adding here 250 because, okay, it's rejected because the reason I'm doing that is, so if you see, I'm holding Reliance, about 1,450 shares of Reliance. So against that, I'm selling this call option. In case market goes up, I'll see that time how to manage it, how not to manage it. For now, I mean, I'll have Reliance in Nifty B's also, in Kotak Alpha also, in different ETFs. That's fine. Against my portfolio, I'm selling a few of these. As the market heads higher around 17,500, 17,600, if we see more of those levels, I'll be selling more call options against. I didn't do covered calls when we were below the 200 DMA, when we fell below 16,800, because it's just not worth it. Market is oversold. Now that we are no longer oversold, I will start slowly, step by step, initiating covered call positions. But yeah, ITC, crazy move. This call option more than doubled. But I have those equivalent shares, right? So I have on this I have close to 3,868. So those shares will benefit much more than what these 3,200 shares will lose here. So it's all like you have to look at it from that perspective. Anyway, thank you so much for watching. I hope you had a great expiry. I will catch you tomorrow. Have a good one. Take care.